We were just talking about crude being on the move. It's been on a come up today, but our chart master says when it comes to oil, what goes up must come down. Carter Worth is at the Plasma to tell us why we might see things go belly up here. Carter?
Thanks, Kelly. Yeah, so it's all about the gap, meaning when you get a security that either gaps down or gaps up, news related often, FDA approval, restate your accounting, or in this case, of course, a drone attack. The concept is that the lowest price on the open is higher than any preceding price on the day. And you can actually see there is a gap in the chart. And we're going to look at this in context of gaps as a principle. So let me just show you a little bit of data, and then we'll go from there. In the past 10 years, 20 years, 30 years, there have been 15 gaps, 51, 112. And all of them have been filled, except for one. And then if you go back 30 years, only 2 unfilled gaps. So this gap is fairly rare, or said differently, while it's not that rare, the notion that it will live on and not be filled is unlikely. Here we go. So the gap, and these are not an investable time frame. If one's waiting for this gap to be filled back from 1999 at $12 a barrel, of course, that's not reasonable. If one's waiting for the down gap when oil was at a peak and starting to come off at 103, that's not reasonable. So these two aside, these extreme, all the others have been filled, except now we have one today. Now I want to put the move in context. Here is that gap, and here is the setup going into the move. I mean, quite remarkable, yes, that once again, a formation of some type or some form can lead to equilibrium and then disequilibrium, but the gap barely changes the long-term picture. And we gapped above the line, and we held our gains, but not impressive. And ultimately, I do believe the gap will be filled sooner rather than later. So the two major unfilled gaps, again, some 100-plus gaps going back. There's one way up here, not an investable time horizon, and there's one way down here. Again, these are tomorrow's lunch. But the notion that this itty-bitty little gap that we just saw, news-related or not, will somehow not be filled, it just doesn't wash in terms of the statistics. So now energy itself, here's the XLE. And what we know is its relative performance has been a disaster, and it has failed every single time when it's come up against its relative downturn. Big move with other value stocks. I don't think it goes much more than this. And then finally, of course, this is either the sad reality or something different. Energy's weighting in the S&P is 4.7%. It's back to historic lows. That's either the great opportunity that some value investor might think, or my judgment is that it belongs here.
All right, Carter, come on over. Let's trade it. Guys, what do you think?
Bring them right over.
Bring them on over.
Yeah. It's not a vote on the desk.
Did I make that sound convincing?
No, it's fine. That's we bring. I think Carter's right in terms of refilling this gap. We're filling the gap to the downside. I mean, again, the price action today was interesting, but I don't think it's, if it was a demand story, I'd be concerned. I mean, the supply is going to come back in all different forms. We're not nearly as dependent as we used to be. And the fact, again, that these stocks or the broader market didn't react in a meaningful way leads me to believe this is not necessarily a one-day event in terms of the commodity, but it's going to back and fill at some point.
What if everybody's wrong about that?
Could be.
I mean, okay, so we know what's priced in right now, a couple of week outing type of event, no major, bigger geopolitical. What if that's not how it pans out?
Well, a bigger geopolitical, that's a force majeure, right? Acts of God that you can't handicap. So if there's missiles are going to fly, of course, it's going much higher. But as of now, the market's judgment, you guys were all talking about that, is muted. And I think that's the tell that for now, this is not the great event that it would, headlines would suggest.
There's also a big difference in the types of crude we're talking about. The ones affected largely going to China, big customer over there. The U.S. crude, it's lighter, sweeter. It's a different refining capacity for us to handle that in our own country. What are the implications if oil stays up here and you're China? You already have an economy that's struggling. Does it kind of cast your trade negotiations with the U.S. in a different light?
Perhaps.
How does that bring it back?
It's an input, or maybe the Fed. These are inputs.
Yeah.
But I mean, it doesn't matter for the market so much because of its low weighting as a sector. And it doesn't matter for the consumer because of the input price of their total costs are low.
But if you did nothing else but buy these sectors when they were at historic lows in terms of the S&P and sell them when they were at historic highs, wouldn't that have been a pretty good trade?
Over time, hard to identify. In fact, when a sector, oil got as high as 30+% of the S&P in the 79, 81 oil spike. That will also work. If something gets higher than 25%, financials have done it, tech, you fade it, but you need a 400-year career to do it.
No problem.
Guy's working on it.
100
So he's
years,
like halfway
there. Would anybody here think that energy doesn't deserve to be the smallest sector of the S&P, 4.5%? Think that it might be more a sign of the bottom than a long-term
Carter's
do.
point. Well, go ahead.
I kind of do. I mean, I feel like, it's been so unloved and so shorted. Maybe the short part of the story is over, right? Somewhat. I mean, if you see how you could get blasted so badly today, maybe that short part is somewhat over, which allows for it to recover on only mildly good news.
Would it interest you enough to get involved in some
a little
of the
bit.
names?
It is actually, yes. It does.
There's something interesting percolating here.
Yes.
I
And then
feel
again,
it.
of course, is it a sector, right? The two stocks, Exxon and Chevron, are half the weight of the entire sector. So is it
Good or
is it a
bad?
sector? Well, you better get those two right, I guess, as a process. But that's the point. It's not as important as it ever was.
Carter, how long would crude have to stay over $60 where you'd confirm and say, you know what, now this thing is going to be able to hold and it's going to
Or
be...
how long to not fill the gaps?
Right.
That gets into what's the frequency at which gaps are filled. Most of the gaps, if you look back, are filled within about 30 days.
Okay.
So that could be a
Give me a
time
month,
stop.
yeah.
Give it a month.